This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we take a look at the market trade action from Tuesday's session, that general kind of risk on tone we saw in the trade. We're joined by Matt Bennett of agmarket.net today. Matt is busy with harvest there in Illinois. He is taking a little bit of a breather here from the field, and he's catching up with us here from the cab today in the field, though. Matt, appreciate the time. I know it's a busy time of year for you there with harvest, but thanks for joining us on Market Talk today. How are you?
I'm doing great, and I'm actually not taking a break, Jesse. I'll just show you. I'm going down through the field, so I guess I'm operating machinery while under the influence of the market. So, we're going to talk about what's going on out here today. But I'll tell you what, right in here where I'm at, I'll just go ahead and talk if you don't mind. I mean, the bean yields right here in central Illinois have been excellent. We knew that we had the right type of rainfall pattern. We knew that we had really good conditions this year, but I think it's been a really pleasant surprise to see what the beans have yielded. Corn yields have been good, don't get me wrong. I think they've been a little more hit and miss, though, than what beans have been. It seems to me we've got a lot of folks calling us saying, man, my bean yields are a pleasant surprise. So we can talk more on that in a little bit, but it certainly plays into kind of what I'm thinking right now.
Well, and let's talk a little bit more about this market, and maybe that'll tie into some of your thoughts with what you're thinking about these yields. I mean, a general kind of risk on day Tuesday, corn, beans. Beans were the leader out of the two, but overall it felt like they just kind of took the cue from some of that positive money flow from the outside market, stocks, energies moving higher, the dollar breaking lower. It just felt like that kind of just general just euphoria a little bit on Tuesday's trade, Matt.
Yeah, definitely a risk on feel. There's no question about it. I mean, whether you're talking yesterday or today, last couple, 3 days have been quite interesting to me. The interest in especially some commodities has been very interesting, especially with the dollar breaking. It sure looks like we could have a high end for the dollar here, at least for the time being. I mean, it's pretty tough to argue against that being the case. Looking at markets like silver, for instance, boy, what a performance we've seen here the last couple, 3 days. But, you look at corn today, you look at beans, you're entering into the thick of harvest, especially with beans being up double digits. We're just a few days removed of finding, you got 30 to 40 million bushels more beans on hand at the end of the year, than what we thought we did, which means we start out with more beans. I'll tell you what, Jesse, you got to be real cautious on a day like today to just expect that this is going to continue. Even if you do see a continued release from this dollar, even if you do see energies going up, because whenever I stop and think about that October report coming up just next week, you got to ask yourself, what kind of adjustments could be made. Yeah, the corn balance sheet might look pretty tight, but the bean balance sheet, especially if that yield might climb a little bit, could look a lot different than what it did in September.
And that could lend itself to possibly some downside pressure. You throw that in with decent to good harvest results, and I would have to think that there is that potential for downside risk here moving into that report, especially on that soybean side, Matt.
Absolutely. I mean, I tell you what, I tweeted something out yesterday which really caught my eye. I don't know if you saw it, Jesse, but on the 20th of September, which was 2 weeks ago today, actually, but was less than 2 weeks removed from yesterday, ADM Decatur, which, it's a big market in my part of the world. They handle a ton of corn and beans. They had a cash bid on the 20th of 1664 bushel. Okay, that was $1.50 over the board. It was a quick ship price. We talked to a lot of our producers about, hey, when these quick ship bids go away, your cash bids are going to look drastically different. The bid yesterday, considering they'd gone from $1.50 over to option the no, their bid yesterday was $13.74. And so, you see the potential not only for basis loss to occur or softening, if you will, but you're also obviously susceptible to the market moving lower, especially as you suggest this time of year. Whenever this weather, I mean, good night, Jesse. This weather's just been fantastic for a lot of folks throughout the Midwest. And I've been talking about it. I talked about it on Monday afternoon on my wire. I said, you know what? Harvest progress is going to be nothing short of incredible over the next week or two in the heart of the Midwest because everything's finally getting ready. Last thing I'll say, you may have already heard this from other folks. I'll tell you what, beans have been tough cutting this year because they've had a lot of green leaves. You'll get them to test, but what I'm seeing now today and yesterday is that they're finally getting to where they're cutting better. So I think you're just going to see incredible progress, the next 2 weeks, which should lend some pressure on this market.
I did see your tweet about the ADM price, by the way, and I think that is very interesting and a great thing that folks need to keep in mind. And I think this could lead us into the next question I have. I know there's a lot of talk, a lot of nervousness with traders about the low water levels on the Mississippi River and how that could be a big problem for corn and beans. It feels like that's largely being traded in the basis and the spreads right now. Matt, what are your thoughts on that situation?
Yeah, absolutely. So last week, Jesse, I was talking with, another person, you probably know him, Todd Gleason, and I just said, hey, on that particular day, I said, Todd, Costco dropped their basis 60 cents at the river today, and a lot of that, of course, as you know, had to do with the fact that, hey, if you're going to be floating a barge down the river, whatever, 60%, or what you normally float it down the river at, then all of a sudden the cost to transport those beans has skyrocketed. And so barge freight is just absolutely blown up. And what it's done is it's really hurt the basis of the river, both corn and beans, but probably more so beans than corn, especially even relatively speaking, because we all know that the bean export programs typically front-loaded at this time of year, before you have the opportunity to see a lot of South American beans being available for export. And so we got to be very cautious as to assume that things like that can't have a big impact. So we were just talking about phenomenal harvest weather, if you will. Well, unfortunately, the phenomenal harvest weather is not doing anything, for these river levels. And so your drafts are just not there. You're not able to get these barges down the river, and it's going to be a major issue. The other thing that you're not able to do is you're not able to float barges, motor them up the river with fertilizer. That's something that we also have to be very cognizant of as we get into this time frame. We all know that dry fertilizer hasn't skyrocketed like you have seen, for instance, in the anhydrous ammonia market. But I'll tell you what, if you can't get fertilizer, you and I both know it's going to change the dynamics of the market as you move forward. So it's going to be very interesting the way this all plays out. But don't go to sleep on what the impact of the Mississippi River not being able to be as functional as normal can do to our markets.
Matt, the wheat market started notably higher on the day Tuesday, then fell lower and kind of ended up relatively mixed. A little bit of pressure in Chicago wheat kind of was a drag on Casey and Minneapolis spring wheat as well. What are your thoughts in this wheat market? Why did it not move higher with all the outside kind of risk on momentum here the last couple of days?
Yeah, that's a really good question. I think a couple of things come to mind for me. The wheat market here lately has been pretty darn excited about, the prospects of, well, what if you can't get all of the wheat out of the Black Sea region that we previously thought we could, or they don't plant as much wheat. And you're talking both Ukraine and Russia at that present time. And so obviously it's been kind of a benefactor there. I do think there's been a fair amount of spreading that's gone on, wheat versus corn, even wheat versus beans in some cases. And I got to think some spread unwinding was going on today, first of all. And second of all, again, that general feel of maybe it seemed to me that traders felt a little bit better about the situation as a whole, whether it be just worldwide tensions, if you will. But bottom line, the wheat market, I think, has had its day lately, and it just wasn't able to participate today. And I think, again, it's probably got a lot to do with the fact that we've already seen some rally action, first of all, and second of all, some of this spread unwinding.
It feels like these wheat markets, we kind of been on this path of we'll go up a little bit for a few days, then we'll pull back, then we'll go up, then we'll pull back. And that it just kind of seems to be stair stepping its way up on a lot of those things you mentioned, Matt. And then you throw in as well, I know there's dryness concerns in the southwestern plains right now that we have to keep in mind, even though USDA says we're 40% planted on winter wheat. It's pretty dry. Texas, Oklahoma, Kansas, etc. So I know there's some other factors in this wheat market, but it feels like we just kind of been stair stepping up and down here the last few weeks.
Yeah, and we may be 40% planted, but we're not 40% emerged. And so I've got a lot of concerns here whenever we start talking about how dry it is. Obviously three big storm systems can make an awfully big difference in just the general soil moisture throughout the Western Corn Belt. But I'll tell you what, someone who's wanting to short the wheat market, on anything other than what I would say is a hedge, and a hedge is probably a pretty smart thing to do for a producer at some of these levels. But if you're wanting to go short wheat, you got to be aware of a couple of different things. I'll tell you, these world wheat and U.S. wheat stocks, the stocks-use ratios, they just continue to dwindle. And so, if you end up with an issue in the U.S. again this year, I'll tell you what, it could be a pretty big ordeal, especially if we're not able to get the emergence we want to see out of this winter wheat crop. So I don't know. It's going to be interesting. I've got to think that if conditions were right, there'd be a lot of wheat planted this year. I think the profitability, especially in areas where you can double crop wheat and then soybeans, has been so profound that, a lot of folks are saying, heck, we're going to go ahead and go for it. And I do think that that's something people would do. But again, I tell you what, it's dry. We were wet the second half of the summer. I know you and I have talked about that. Excellent conditions. We felt like we'd have a really good crop. But I'll tell you what, Jesse, all of a sudden it's gotten dry here. I mean, it is dry in my part of the world. And I don't know too many people that can say anything different than that, especially in the heart of the Midwest.
Well, Matt, let's talk livestock as well from Tuesday's trade. That was another area that really just couldn't capitalize on the risk on type of feel in the broader markets. Cattle, hogs, all kind of fell under pressure. Hogs kind of led the way down on the session on Tuesday. Let's start there. We saw that quarterly hogs and pigs report last week, showed the shrinking hog herd slightly, but you look at this hog market, we've come down a long ways, and thinking we've found some technical support. What's your thoughts on hogs after Tuesday's session and just kind of a rough day it felt like?
I think whenever it comes to hogs, it's pretty tough to expect something, I guess a rally it's a risk on day, but, whenever we're talking livestock, whenever you see all of our feed grains up in price. Now, I've been a little bearish hogs for a while in here. I've felt like without really strong exports, you're going to struggle to see hogs get some of the excitement built back in that we'd seen previously. But, at the same time, I've been a little bit friendly to cattle. And so it's been a little bit different dynamic that I've talked about. But I do think that you've got a couple of different markets there. And I think whenever you start talking cattle, yeah, consumer confidence, if it's going to be down, if the equities are going to get beat up like we've seen lately, it was a little bit tough on cattle to rally. But whenever you actually get the Dow back going, if you can get feed costs to not substantially rise, I've got to think that these cattle are going to be awfully good property moving forward. I'll tell you what, the next few months could be pretty rough on that cattle feeder, though. But overall, I think livestock is probably going to struggle to enjoy a day like today, especially whenever you see, again, any of your feed costs continuing to go up.
And you and I have talked about that a couple of times with those feed costs, especially some of those guys in the southwestern plains and the feedlots there where corn is going to be a little bit scarce to come by. It's going to be a pretty tight margin for those folks there. We're going to have to watch this market. Looking at the outside markets on Tuesday, Matt, crude oil moving higher. And again, the stocks moving higher. It looked like the tech sector kind of led the way, but that risk on kind of trade, it seems like there's this feeling that we've reached peak monetary tightening. What are your thoughts on that right now, Matt?
Yeah, you've got to think so. Whenever you've got, for instance, the UN coming out and saying, hey, we need to pump the brakes on raising interest rates, that's an interesting deal. I don't know that I've ever experienced hearing them say something like that, first of all. Obviously, you've got a lot of concern. There's been talk of some of these banks obviously having some serious over-leveraging issues. And I guess from my vantage point, it's a really good sign that you actually see the Dow moving back higher. I think another really good thing for us, as interest rates continue to go up, is just talk that maybe we need to take a more cautious approach moving forward. I do think interest rates will still come up just a little bit more, but are we going to get into a situation where we just skyrocket? And I don't think that'll be the case if we can finally see inflation back off. Now, one thing I would say is OPEC talking about cutting production, leads a lot of people to say, hey, we're going back to $95, $100 on crude oil. For agriculture overall, that's not such a bad thing, but that's not going to do a whole lot to curb inflation. And so it's going to be a really tight balancing act that we're going to see some of these world economies try to navigate over the next several months. And I'll tell you what, as a producer or a business owner or anyone, quite frankly, we need to be paying close attention, whether it's interest rates. I don't know if you've heard me say this, but I've said it the last couple winters. Low interest rates should be locked in. Why? Because they're low interest rates. And so, while they look like they're certainly higher than what they were previously, if a person's super concerned about it, it may not be such a bad idea, at least on some of your money, to make sure you get that quantified, manage risk, just kind of like we do as far as commodity prices go.
Well, Matt, fantastic thoughts as always. And real quick before we let you go, any other final thoughts you want to share with us today?
Yeah, I think, overall, whenever you're harvesting, I'm a big advocate of just making sure you say, hey, you know what, I know what my yields are now. I'm going to go ahead and true these things up, with some of the prices I'm able to lock in. But some of the stuff that maybe you didn't get locked in or that you don't have contracting or you can't store at home, let's run the math on them, because I think getting some of this money paid down and maybe not having such a big, especially if you got a variable rate operating loan, I think we got to be very aware of what it costs to have money borrowed right now, because it's a different story than what it's been the last few years.
Well, Matt, I know if folks need advice, they can reach out to you and the agmarket.net team very easily, going online to your website, agmarket.net, giving you a phone call, checking out your app. A lot of great ways to get in touch with you guys, isn't there?
Absolutely. So we look forward to hearing from anybody who wants a little bit of help.
Agmarket.net, a great place to start. And with that, we appreciate the time as always. Matt Bennett, agmarket.net. Thanks for joining us here on Market Talk today, and have a safe harvest. We'll talk to you again soon.
Absolutely, bud. Thank you.
Matt Bennett joining us today. That's going to do it for Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.